This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Well, now that CEO Carol Bartz has been let go from Yahoo, we thought it was a good time to take a look at that company's stock picture. The stock had a bit of a jump up immediately following that news, but published reports still have it down about 60% below its 2007 high. And here to tell us more are Tracy Reinick and Mike Vodicka. So, Tracy, what I'm hearing here and what I'm reading is that part of the stock's rise due to hopes that the end of the Bartz era might mean the end of Yahoo as an independent company.
Right.
So do we really have something to celebrate here until we see how this all pans out?
Yeah, we'll have to wait and see, but all indications, if you just look at kind of how they fired her, who they put in as CEO, which is the CFO, he's kind of an interim guy, kind of lead you to believe that they want to do something else because, you know, there was no game plan in place if you're calling the CEO while she's on a plane to let her go. So yeah, stock investors kind of like that because now they think, oh wait, we might get bought out or something good is going to happen because that's all that's really good that's been happening with this company for quite some time.
Yeah. So Mike, as far as the momentum picture is concerned, it's got a one-year target price of $17 and change, $17.50. And lately, it's kind of near middle to upper end of the 52-week range. What are you seeing?
Yeah, you were referencing before the longer-term picture with Yahoo, and there's no question that shares have been weak for the last couple years. I brought a 3-year chart with me. That's where I want to start off.
Okay.
Is you see shares topping off in 2007 at $34. And since then, it's been a fairly steep decline. More recently, moving into the 3-month picture, you referenced a little bit of short-term strength, and that actually is what we're seeing here. We saw shares bottom out on August 8th at right around $11, and since then they've bounced up to about $15 right now. So that's a pretty sharp short-term gain. And we also did see some nice upward movement when the company announced that they were letting go of Carol Bartz. And you referenced the fact that the market might be pricing in a little bit of expectations for a buyout. I definitely think that that's in play right now, and that's supporting Yahoo's share price.
Okay, so Tracy, a lot of people refer to Yahoo as no longer the tech innovator that they once were. Is a buyout likely, or are they more likely to go looking for another company that they can join up with?
It's hard to say. You know, they're not without a business model, obviously. They are making money. They're expected to make about 75 cents a share this year. They made only 73 cents last year, so there's not much growth there. They still are pretty big in search. They control about 16% of the search market, but that hasn't been increasing, so there's not much growth there, but it does have a market. They do own a lot of assets in Asia, which people forget, especially Japan, and that's a big part of what their overall value is, so they might be able to unlock that some way. But the problem a company like Yahoo has is that they're in Silicon Valley, which is a very competitive hiring market, and they've seen they've had 3 CEOs in the last 4 years, and every time they get a new CEO in, it stems some of the bleeding of the employees leaving to go to places like Facebook or Twitter or even Google. And so that did happen when Carol Bartz went in, but then over the last little over 2 years she's been in there, the bleeding of the employees is going on again. So when you lose your best people, it's hard to be innovative, especially in a place like Silicon Valley, which is that competitive. So, you know, that's why a lot of people believe that the only place that this company has to go now is in some kind of either buyout, maybe private equity, maybe merging with someone. Microsoft has been talked about again,
right.
But you know, they came in with the offer over 2 to 3 years ago, and that didn't go through. So it's unclear here, but they do, you know, they are making money, so there is a business model there.
So are the analysts yet beginning to cut expectations, do you know?
Not so much because, well, that's kind of, we'll wait and see. Some of the analysts did believe that maybe the timing of this firing is because the third quarter is not going to be all that good. So, you know, we'll have to wait and see. But, you know, again, it's not a bad picture for them, but they are starting to lose they have been a lot of their key assets, which is in the human component.
Might be able to just say Yahoo searching for direction here, since it is in the search business. Get that little tie in there. I'm getting better at this as I go. With Tracy and Mike, I'm Terry Ruffalo.